Hey guys, Joseph Henson here with Henson CPA Group. We just got done with our series over what buyers are looking for when someone is trying to sell their clinic, and we're going to jump a little bit more into preventing IRS problems before they start and what that really entails when it comes to the IRS, your taxes, your payroll taxes, and a whole slew of other items. Because most problems don't start with an audit, they usually start with small issues that go unnoticed for months or years. Again, I'm Joseph Henson CPA with Henson CPA Group. I have a booking link down below that you can reach me at. Just let me know, and we will just go ahead and start from there. IRS problems rarely happen overnight. Most IRS issues start as missed deadlines, inaccurate information, bookkeeping problems, notices that don't get addressed. The biggest IRS problems are usually the result of small issues that were never corrected. It was the payroll report you forgot to file. It was the negative liability account on your book overstating your income or your liabilities. It was the fact that you didn't make estimated tax payments. You didn't, and all of a sudden owed $50,000. Those things are the issues. It's not just the IRS saw something they didn't like, had questions. It's what led up to it. Good intentions don't always equal good compliance. Many business owners are busy. They rely on outdated systems. They assume everything is being handled and they don't realize something is wrong. And that is the root issue and why most IRS issues aren't caused by bad intentions. They're caused by lack of visibility. You're too busy to get to check up on every single thing. You rely on a system that was built years ago to handle things now. Maybe that's paper and you haven't switched to an online vet management software or a server base. Your old school, stuff still falls through the cracks. You assumed your accountant was handling this, your office manager was handling it, but they didn't, or your payroll company. And so you don't even know what's wrong. The IRS loves patterns. The IRS will often identify inconsistencies, missing information, filing gaps, and reporting mismatches within your business and other businesses. They aren't looking for fraud, but they're looking for things that don't make sense. They can tell when it conflicts with what the reality is. They are using databases, large language models even nowadays, to see what is abnormal within the businesses like yours. When you have your tax return, you have a code on it that says what you are. If you're a veterinarian, it's going to say, here it is. This is a veterinary hospital. And they're looking at what you're doing and comparing that to other people in the same industry. So they know if it's wrong. They know if your payroll is 90%, something's weird there. If you have an issue and all of a sudden your office expenses are 30% of revenue, something's not right. It looks like maybe you didn't capitalize something. If you have travel expenses that are abnormal, they're going to see that and they're going to question it. And that's what they're supposed to do to make sure you as a taxpayer are following the law. Bookkeeping problems often become tax problems. Weak bookkeeping can lead to inaccurate returns, payroll issues, missed deductions, reporting inconsistencies. And those problems start way before the return is filed when it comes to taxes. If your items are in the wrong category, it is very possible you overstate the expenses in one, understating in another, but that can still throw a red flag if it's out of a key metric that's typical in an industry. Now, if it's 1 or 2%, no one's going to look at it. But if it's 10, 20, 30% higher, take travel. That's a huge one. If your travel expense on $1 million clinic is $250,000, that's going to raise a red flag. Most veterinarians do not travel $250,000 worth of expenses a year. So that's going to have questions. Why is it like this? Well, we bought a new car. We didn't capitalize it. We put it in here. Well, that's an issue. What is the car business use only? No, we actually use it for personal mostly, but it's in the business name. Another issue. And that's when you realize I did this wrong. My bookkeeper did this wrong. My accountant did this wrong. Something was wrong. Doesn't mean it was fraudulent, but it was wrong. Payroll is one of the biggest risk areas. Common issues will typically include those missed payroll deposits, the filing delays, the reporting mismatches, and employee classification questions. The payroll issues tend to escalate faster than many owners expect. If you are not paying payroll taxes because, hey, money's tight, that's going to be a problem because they're not going to let you steal from the government with money you were entrusted with, had in trust on behalf of your employees. You missed the payroll deposits. You think it was one, you realize you sent it, next thing you know, it was actually 3 or 4, or it was monthly. The filings haven't been done timely. These are issues that need to be addressed quickly and efficiently. Ignoring IRS notices never helps. Many owners delay opening notice because they're busy, they're overwhelmed, they assume it's minor. With the IRS, issues rarely improve with time. The sooner you understand the notice, the more options you have. I get a letter from the IRS. I get lots of letters from the IRS for clients. I'm opening those day of. I want to know what's being sent to clients. What issues are we trying to solve? Or did I receive correspondence back from one of the many letters I've sent them for someone we are helping with representation? That's one of the great things about how we do it. We have a form on file allowing us to receive notices on your behalf so that if you receive it, we receive it, and we know how to start addressing it. The financial visibility matters. Strong visibility helps identify problems earlier, reporting errors, cash flow concerns, and tax surprises. Many owners don't discover issues until they're already dealing with consequences, and that's where the problem lies. If you are not in your financials and seeing what happens to yesterday, today, we have an issue. We want that visibility on a monthly basis, a consistent basis. So if you notice something is weird, we can get it fixed. Perfect example. I was helping a new client one day and realized their travel expenses jumped by $20,000 in 1 month. They normally were around, $300, $400, $500. They have a lot of traveling vets, and it was $20,000+. I dig in. Somehow, before we had taken over, it was a credit card payment put to a travel expense. Why? I don't know. It was in a prior year. We had to go through a whole process to fix it, and it was okay. Luckily, they hadn't filed their return yet. They were on extension, so we were able to correct that. But they would have been going from a travel expense of, somewhere around $3,000 to $5,000 to $25,000, and that's a red flag. The best prevention strategy is for businesses that avoid IRS problems often have organized financial records. They are regularly reviewing their reports. They have proactive tax planning and clear communication with advisors. You'll notice, though, perfection is not on that list. No one's books are perfect. No one can sell you perfect because, hey, we put this in office expense, but it was truly a COGS item. It was actually some supplies we needed for administrating medication. It got mixed up. It's not perfect, but it's immaterial. But we are organizing it. We can find those little ones. We want to review reports regularly every month to pick up those inconsistencies. It's a much easier month to month to see, hey, I jumped up 20% in this area. That's weird. What's going on? Pull the transaction report and go from there. And when you're communicating with your advisors, whether that's a CPA, an EA, a bookkeeper, a financial advisor, an outsourced CFO, but communicating with them will draw attention to it to make sure it's done correctly for the future as well. What most owners realize too late. Many owners eventually discover we thought everything was fine. Usually this is because nobody was reviewing the numbers closely. Problems were building quietly and assumptions replaced visibility. This is something that we really want to pay attention to with business owners. You need to review your numbers. Now, let me say something else. You don't have to do them. You don't have to understand all of them. You need the ability, though, to be explained it and be able to ask questions. You need to be able to review those numbers to make sure it does work. The problems were building quietly. They were little bits here and there. It's one of the biggest issues with fraud. If you're not reviewing what's happening, if you're not doing a daily deposit report, those issues build. And then just making assumptions, not actually digging in to see what's happening. The goal isn't just avoiding notices. The goal is fewer surprises, better decisions, stronger financial systems, and confidence in your numbers. You need to be confident because businesses that stay ahead of their numbers usually stay ahead of their tax problems. And if you can stay ahead of your tax problems, you have a lot better sleep at night. If you're not completely confident in your bookkeeping, payroll, or tax filings and financial reporting are all working together properly, it's worth taking a closer look. Book a call with me. We can discuss options for IRS notices and help identify potential problem areas before they become larger issues. My booking link, like I said, is down below in the comments. I'm Joseph Henson with Henson CPA Group. You can reach me via email, booking a call with me, however you would like. But until next time, guys,